The market is sucking wind, but you have been leading on to a recession for some time. I think we had it postponed by the Fed pivot that I'm sure Steve will also talk about. And from December to January, they made a dramatic change. That changes the short-term trajectory for the stock market and the bond market, but it does not forestall a recession happening.
Is the effect of the Powell pivot, Steve, has it run its course?
In the stock market?
Yes. Yes.
It depends always on whether or not the change in policy is equal to the change in the outlook. And I think for the initial round of weakness, I think the policy was well suited. If we do take another leg down here, I think the Fed pivot is not going to be enough. And what was interesting listening to Draghi this morning, I don't know whether or not what's happening in Europe is Europe's problem or a problem of what's happening in the globe. And something that keeps coming up that we're maybe not paying enough attention to is the slowdown in global trade. To the extent to which some of this was caused by the tariffs and retaliatory tariffs, and you might have had some of that going on ahead of time, some of that was happening. There were two studies out on the impact of tariffs on the economy. One of them talked about if current tariffs were in place next year, $165 billion worth of trade is going to have to find another route. You've dislocated supply chains. There are effects here, Tyler, that go beyond the pure percentage point GDP. So I'm really focused on this issue. Are Europe's problems Europe's own, or are they part of a bigger global problem that we have to think about that begins with global trade? And I want to thank Carl Weinberger from HFE, who's talked a lot about that.
And Tyler, along the lines that Steve talked about, I think Europe has clearly problems of its own, which we have seen for some time in terms of the
Italy's
slowdown.
in recession. Germany may be getting
almost in a recession. And then that is what the ECB was referring to. But then again, going with what Steve said, it is being compounded by the slowdown in global trade because Europe is much more export dependent than the United States. In Germany, 41% of GDP is from exports. In the United States is 13%. That's the big difference.
Let me ask you this, though. Do you believe that there will be a China trade deal? Yes or no?
I think there will be a China trade deal, yes.
Yeah, and the Chinese government is embarking on a massive wave of stimulus, as they outlined just this week at the People's National Congress. And so if we are to believe that China is doing everything that it can to lift its own economy, doesn't that also help Europe in the end? And so therefore stave off the worst, the brunt of the European slowdown? It
will help, Melissa, provided the Chinese stimulus is actually going to help push up the Chinese growth. I don't think it will. It will only slow down the rate at which the growth is falling off. They have just projected that the GDP growth will now be in the 6% area. It used to be 6.5, 6.7. And if you look at really the statistics that matter, railroad traffic, electricity consumption, consumption taxes going to the government, they tell you a very different story. They tell you the economy is slowing very sharply, and China is not going to turn around very quickly.